This is the briefing for Friday, October 3rd. Well, as you know from Wednesday and Thursday's briefings, I've been very concerned over what's happening in terms of volume. With volume increasing but net volume decreasing, it's been really a flag that has given me a little bit of heartburn in terms of the sustainability of this current rally. Now, today was certainly a pretty impulsive day, at least at the beginning of the day, in terms of price development, and certainly the trend is up. We have to respect the development of price, but also I think there needs to be some caution and some concern, at least that there's some caution flags, if not red flags, that are beginning to fly in terms of this continued rally that we're seeing, which appears to be based on, at least that's what it appears to be, is that it's based on speculation over the AI industry and what's going to be happening with that. But getting back to the technicals, you can see here that this is total volume on the NYSE. You can see that it has been increasing. The trend in volume is up, but net volume, which is up volume minus down volume, is trending down, which means there's more down volume coming in as opposed to up volume. In terms of the NASDAQ, you can see volume increasing pretty dramatically, but also pretty dramatically net volume decreasing as well. And even in today's trading, when we had the pretty good move to the upside, you can see that net volume was down as well. At least we had that move to the upside, but it was mostly retraced going into the closing today. So it's going to be interesting to see how this is reconciled. I'm still not sure what happened here in terms of this spike in net volume in the NASDAQ, but you can see that it retraced some in today's trading. Now, also I want to talk about the percentage of stocks above a 50 and 200-day moving average. So you can see the trend here is down. Now, certainly we did make a test of the trend line in today's trading. This is a percentage of stocks above the 200-day moving average. You can see it's down, but then it expanded. Now, this is a little bit longer term development, so the impact of the percentage of stocks above its 50-day moving average will have on this is going to take a little bit of time before we see the results of that. In terms of the NASDAQ, you can see that it is turning lower as well, turning lower in the 200-day moving average. And in the Russell, you can see the Russell, the percentage of stocks above the 50-day moving average and 200-day moving average are declining as well. This is not typical. These technicals are not typical for a rally that is sustainable or a rally that has strength from an internal perspective, which gives me great concern over potentially what is happening in terms of the internals of this market. Now, this is a daily chart of the spiders, so you can see here that you can see breadth was declining. We've got a little bit now of a potentially flatlining in terms of market breadth. So that's going to be interesting to see how that is resolved and see whether we get a turn down. In terms of the NASDAQ or the Qs, you can see breadth continuing to decline even though the rally is sustained. And then, of course, you can see a little bit of a tick up in market breadth in today's trading as well. In the Russell, the trend is down. I didn't put a trend line on it, but you can see it is down right through there. So it's going to be interesting to see how that occurs going forward. 741 shares positive in the Russell. Russell was really on fire today until the late afternoon sell-off. In terms of the NASDAQ, only 952 shares positive. And in terms of the NYSE, only 584 shares positive. Now, you would think with the Dow up at one point, I think it was 470 points, and the other indices up pretty good in the early morning to early afternoon trading, that we would see the internals much stronger than they are, at least at this point in time. Interestingly enough, this is the market breadth in the S&P 500. And you can see how it was only 144 shares out of 500 shares that were trading higher as opposed to lower. You can see here, this was today's trading right through here. So you can see this was yesterday's close. So we closed right at or just below yesterday's close in the spiders. Same thing in the Qs. You can see this is yesterday's trading. This is today's trading, and you can see that we closed basically at or just below yesterday's close. So this rally was impressive this morning, but about halfway through the day, then the tide turned, and we retraced almost all of what the rally occurred in the morning. Same thing, a little bit clearer in the Russell. You can see the move higher, and then of course the rotation back down, testing the opening gap in today's trading. Now, it's going to be important on Monday. These key reference areas, especially the low from yesterday, the low from today is very important. You can see there's a buying tail right there, and then if this is convictive buying, the gap is convictive buying. So if we trade about halfway through that level down to about 244.60, it's going to suggest that the gap's going to get closed. And then, of course, we're looking at support coming in at 243 in the Russell. In terms of the NASDAQ, we didn't have a gap in the Qs, but you can see if we break much below the 603 level, which is about where it closed today, closing below yesterday's low, then that's going to open up potentially trading down to 596. And a little bit different in the spiders, you can see 667 is support. And that would open up potentially trading down to the 665 half area. Now you can see even on a 60-minute basis, you can see what's happening with volume in the spiders, volume in the Qs, and volume in the IWM. So it really is suggesting the potential that the internals of this market, the internals of this rally, really did not improve in today's trading, and in terms of price development, literally all of the rally that occurred earlier in the day was completely retraced. So it doesn't send a good signal. Now, as I said in yesterday's briefing, I use a psychological percentage number, and it's not statistical, but I use 70%. When there's a divergence in the internals in terms of price, I use a 70% analysis or probability that the price is going to correct to the internals. But that also means there's a 30% chance the internals are going to correct the price. Now, it typically happens around a news event, as I said yesterday. So it's going to be important to see what happens going forward. Now, it doesn't always have to happen, but typically that 30% will become the greater probability around a news event. And so far, the internals have strengthened slightly in today's trading. I think I'll have to give it a slight improvement, but really not to the point that you would suspect that the rally that we saw in today's trading would have been sustained, and it wasn't. So it's going to be important, if the rally is going to be sustained, it's going to be important for the internals to correct and begin to support price. If not, then the rally is at risk. Now, am I saying that we're going to see a huge sell-off? No, I'm not. What I'm saying is that based on what I see from the technicals of this market, that if we begin trading through lower support levels, then that's going to suggest the potential for trading through intermediate support levels. And if those are traded through, then the potential is that we're looking at a greater degree time and price, counter trend rotation, or even a change in trend. Now, I'm getting a little bit ahead of myself in that case, but right now, at least for the short term, unless or until the internals change to support this rally, the rally is at risk. And that's that. Am I saying the market's going down? I'm not. I'm just saying that it is at risk, at least at this point in time. And we have to respect the trend. The trend is our friend. The trend is up, at least at this point in time, and at least for now. But certainly we have to be very cautious based on what the market internals are telling us. Have a great weekend. I'll pick this back up again on Monday for subscribers.